Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Wednesday, January 23rd, 2013. Thank you all for tuning in. Let's jump right into the charts. We'll start off with the usual S&P 500 E-mini futures. You'll see that the futures are trading lower by about 2.5 points to around the 1487 level. So again, a little bit of a dip on the futures to start the day before the opening bell. However, generally we see the markets sell off early in the morning and then they seem to float right back up during the afternoon session. So again, we'd really need to see some follow through to the downside. Right now, markets are holding steady. This is a little bit of a surprise considering the fact that Google had pretty solid earnings last night. IBM, or I shouldn't say they had solid earnings. What I should say is that the market reacted positive to their earnings. Also, IBM, Cree, and a host of others, Intuitive Surgical, all had very positive reactions to their earnings. So we are seeing the NASDAQ flat today. We are seeing the S&P 500 E-mini futures down a little bit, which is a little bit of a surprise, especially after yesterday's high-profile earnings reports that are doing pretty well. We'll go over those stocks in just a few minutes, but a little bit of a surprise to see the S&P futures are down and the NASDAQ futures are flat. Apple is reporting earnings today after the bell. I believe Netflix is another one, as well as SanDisk. So you have some more big tech earnings coming out today after the closing bell. Apple, most notably, is going to be the big one that everyone will be watching. So, again, let's just take this market one day at a time, one step at a time, one bar at a time. And that's really what you want to do in this type of environment. Very, very overbought climate, but that's the way it is right now. Good news is bad news is good news, and good news is great news, as they like to say. But that will change at some point. A couple of other things to go over real quick. Gold is down about 1 point to $16.92 an ounce. Not a big deal there. If you take a look at the GLD, you'll see that the GLD is trading right around the 164 level. Upside, I guess it could, get to 165.50, 166, but that would be pretty much the extent of it. Let's take a look at oil this morning. Oil is trading higher by 8 pennies, and that's light sweet crude, that is, to around $96.77. So if we take a look at the USO, what you'll see here is that the USO is trading around that 35.10 level. Again, decent little push, but nothing all that tremendous, but it is higher than where it closed yesterday. So we'll have to watch that. The catalyst for stronger oil and for stronger gold, in my opinion, would be a weaker U.S. dollar index. And if you take a look at the dollar this morning, you'll see that the dollar, let's just get rid of these lines, is trading a little bit lower today, down by about 12 cents at the moment. So, again, dollar down a little bit, not getting hammered or anything like that, but a little bit of a weaker dollar, so we'll have to watch for that going forward. At the moment, the European markets are all pretty much on the flat side. You do have the German DAX up about, it's up 14 points to around 77.06. That's almost 0.2%. The FTSE 100, which is not, which can print their own money, they're up about 10 points at the moment. The CAC 40, which is France, down about 14 points. You do have the FTSE MIB, which is Milan, Italian market. That is down around, I guess it's down around 0.6%. And the IBEX 35, which is Spain, that is down about 0.3%. So, Europe is basically flat for the most part. So we'll have to watch that closely. Last night you did have the Nikkei 225 in Asia sell off by more than 2%. So again, if you don't keep printing that money, that market's going to go down. And that's what it comes down to. So they took the pedal off the metal, and you can see that the Nikkei 225 with a 2% decline last night. And that index is just over bloated on promises and money printing. I mean, this just stuff is just unsustainable. But in any case, it is what it is. So watch the Japanese ADRs today. They could come under some pressure. You want to be careful there. All right, a couple of other things here. We got some stocks in play today. Let's take a look at Google first. Google's a big one. The stock is getting a very positive reaction to earnings. It closed yesterday at $702.87. Today it's trading at $738. So very good little pop. It is a strong gap up. It has not taken out that 740 pivot. So there was a pivot there going back to January 10th at around 745. That level has not been taken out. But with a strong gap up, you give Google the upside bias. Really, the next big level that you have to watch for is really around that 785 to 790 level. There's nothing you could do in between here. It's a strong gap up. You don't want to get in front of it. If it fades, it fades. If it doesn't, it doesn't. But strong gaps, you don't really want to get in front of. Again, little resistance at that 745 level. But if it gets through there, this thing could easily get back up to the the 785 level, which is 775, 785. So you leave Google alone for today. Let it tell us more before we pick on it. Another one you want to look at is IBM today. IBM's having a major gap up as well, but this is not as strong as the Google gap up. It's coming from a higher point. The stock closed yesterday at 196 after earnings today. It's trading up around 203. I do have some levels of resistance here on this one. 205 would be a very, very good resistance point for IBM, and then it's really all the way up to around the 208 level. So aggressive traders want to step in front of IBM around the 205 level. There's no problem there. Again, just be a little bit careful because sometimes these stocks can go higher than you think, but I think there's a fair amount of resistance right around 205. Right now the stock is trading around 203, so there is a little bit of potential upside there, but it is a weak gap. So again, that one will face some pullbacks as opposed to Google, which has a strong gap up and will have a lot of short squeezing going on in it. All right, let's take a look at Cree. This here, another chip maker, LED lights and things like that. Really, really nice move on Cree. This is a solid move up. The gap is not that powerful, but nonetheless, the stock is making a very robust move. I'm thinking that the stock has some resistance generally in this area, but watch the 41.47 level and 44.39. That will be your pullback levels. It may even pull back around this area. I can't rule it out, but I like to go off of specific mathematical points when I give you these scalping levels, and I'm going to say 41.50 and then 44.40. So use those levels. Those are going to serve you best, I believe, going forward. Stock that is getting hammered today to the downside is Coach. So Coach closed yesterday at $60.68. Today it's trading at $50.78. This stock is just getting slaughtered. Traders will want to watch a couple of levels on Coach. Aggressive traders can watch the 49.65 level, and after that it's really all the way down to $45. So I know there's a double bottom on Coach daily chart at 48. That might be a play. But really the next better level I see is going to be at 45.50, and then it's going to be at 37.54. Not sure if it gets all the way down there today, but keep it on your radar because it just might. Let's take a look at Intuitive Surgical. ISRG is the ticker symbol. They had earnings as well. This is not really that strong of a gap. Stock is trading at 560, which is a huge move higher. 585, 588, around there. It's hard to pinpoint this one. It's such a big stock, and it's a low volume name. That's where the stock should hit pretty good resistance if it can get up there. It's a tough stock to short because of its thin volume. Today it may have a little bit of extra volume, so it could see a pullback around the 586, 588, somewhere in that vicinity. It's very hard stock to, maybe even 590. It's a very hard stock to pinpoint to the penny. But I would not be a buyer of Intuitive Surgical at all, even at this level. So be very, very careful. Let's take a look at STJ, St. Jude's. This stock's getting a little bit of a gap up, closed at 39.60. It's trading at 40.25. Do not chase this one, okay? The stock has a lot of resistance, I believe, around the $40 level, so you want to be a little bit careful there, but I would not chase it even at this point right now. It may even be a fade candidate at around 40.50, 40.45, somewhere in there. It's hard to pinpoint it. And then 41, obviously, even more resistance. The weekly chart is telling me there's resistance around the 42.60 level. So, don't chase it. If you're an aggressive trader and it gets up there and you want to try a fade and it's early in the morning, I don't have a problem with any of those levels. But just realize, you got to let it get up there a little bit more. Right now the stock's only at 40.25, so I'd let it get up there a little bit more before jumping on board or trying that. But I would not be a buyer at all on this one. Some rail stocks also have earnings. CSX with a little bit of a sell-off. This could hurt the transports. Transports have been soaring and roaring to the upside, but CSX closed at 20.80 yesterday. Today it's trading around 20.80. No real strength here. I don't even see much upside in this one. Norfolk Southern, NSC, is another one. This one has faded about $2 off of its high. After earnings, it shot up to around the $68 level. It closed at 67 yesterday, now trading at around 67. So there's not that much you can make of it. If it does sell off, though, I like the $60 level for a bounce play if it got down there. I don't know if that will happen. On the upside, if it gets to around 69 bucks, maybe 69.50, there will be a lot of resistance there. So there's not much you want to do with this one, at least at the moment. So that's where we stand. A lot of in-between gaps here, so you still got to be a little bit cautious. The market is also very, very overbought, so that's always a little bit of a headache or a problem. But either way, we'll see how this thing trades out going into the opening bell, and we'll see where we are. But you just take it slow, look at each individual name on an individual basis. That's what you have to do during earnings season, and we'll get a lot of big earnings, like I said, after the bell today, including Apple, Netflix, and SanDisk. So that will affect technology going forward. All right, so with that said, everybody, I want to wish you all a great trading day, and I'll see you on the charts tomorrow. Take care, everyone.